Are you ready to become a master of double entry accounting in just a few minutes? We're about to unravel this fundamental accounting concept and empower you with the knowledge to navigate the financial world. Double entry accounting serves as the backbone of financial reporting, and once you get the hang of it, you'll hold the key to understanding how businesses manage their finances. There's no need to be intimidated by complex jargon or confusing formulas. We're here to break it down, step by step, using simple examples. Whether you're an aspiring accountant or simply looking to boost your financial literacy, this video is your express ticket to becoming a pro at double entry accounting. Let's dive straight in. Have you ever wondered what double entry accounting is all about? It's a clever way to keep track of your money. Picture it like a seesaw. On one side, you've got something called debits, and on the other, you've got credits. Debits are like adding money, while credits are like subtracting it. When you record your financial moves in your accounting journal, you follow a straightforward rule. Put the debits on the left and the credits on the right. It's just like making sure you capture both sides of the story. Most times, you'll find one debit and one credit. It's like a matching game. For instance, think about receiving an $800 bill for some outside help. On one side, the debit, you note that you spent money on outside service expense. On the other side, the credit, you record it as accounts payable. Technically, it's like saying the total money you added, debits, should be equal to the total money you subtracted, credits. Now, let's dive into something a bit more advanced. Imagine a big company making an entry with 3 debits and 2 credits. What's crucial here is that the money added, debits, must match the money taken away, credits. It's akin to ensuring the seesaw remains perfectly balanced. Here's another way to understand double entry accounting. Every financial transaction requires at least 2 entries, one for the give and one for the take. It's a bit like you can't score a point in baseball without hitting a double. Always keep in mind this mathematical equation. Assets equals liabilities plus equity. This equation is the heart of accounting. Why is this equation so vital? Well, at the end of the year, you create a report called a balance sheet. Think of it as listing everything you own and everything you owe. And guess what? The total on one side must match the total on the other. It's similar to ensuring the seesaw is perfectly level again. If one side goes up, the other side must go up too. When you add something valuable, like a computer, it's considered an asset, and it gets a debit. If you owe money, such as a loan, it's a liability, and it gets a credit. Don't forget about equity. It's like what's left over. If you make money, it goes up, and if you lose money, it goes down. Making money gets a credit, and losing money gets a debit. Now, let's revisit that big company entry we talked about earlier. It involved 4 asset accounts and 1 liability account. The total increase in assets from those debits should match the total increase in liabilities, and indeed, it does. The seesaw is perfectly balanced. But what about that bill for outside services? It's clear that it increases what the company owes, making it a liability. But what about the expense side, the debit? Remember, at the end of the year, profits boost equity and losses reduce it. So even though the expense goes up, equity goes down. It's like a seesaw again, ensuring everything adds up. So there you have it, the mystery of double entry accounting demystified. We've ventured through the world of debits and credits, assets, liabilities, and equity to provide you with a better grasp of how businesses manage their finances. Now, we'd love to hear from you. Have you ever encountered double entry accounting in your personal or professional life? Feel free to share your experiences or any questions you might have in the comments below. If you found this video helpful, don't forget to give it a thumbs up. And for more insightful content like this, make sure to subscribe to the Accountant Coins YouTube channel. Keep expanding your financial knowledge. It's your path to financial mastery. Thanks for tuning in, and we'll catch you in the next video. Until then, keep counting those coins.